Hello, welcome back to Mining Network. I'm with Simon Marcotti, the President and CEO of Northern Superior Resources. Simon, you're in London. It's a shame that we haven't been able to do this face to face today. Um, but first of all, just for those, I imagine those watching in London or even in North America, if they haven't heard of you, what is Northern Superior?
So Northern Superior is listed in Canada and also in the United States on the OTCQX. Canada, it is trading under the symbol SUP. Northern Superior has a market cap north of $100 million now. Um, and the main strategy of the company has been and continues to be to consolidate and advance the Chibougamau Gold Camp in Quebec. If you allow me, I'll touch a little bit on who is behind the company. So besides myself, there's Victor Cantori as executive chairman. Peter, you probably know Victor from Amex Exploration, which has been one of the biggest wins over the past decade in Canada, right? I mean, Victor took Amex from around 5 cents to close to $4 in a matter of, I think, 2 or 3 years. We also have Mr. Michael Gentili, who's an extremely involved director. He's also the largest shareholder. So Michael is extremely well known in the mining space and has been very, very successful. And I'll also mention, without going through in details, so we have everybody involved, but we have a lot of technical capabilities, a lot of technical depth, which allows us to punch above our weight class. And we keep supporting the company financially quite a bit, as we have in recent years. And we invested a lot of our personal money, so much so that we own about 25% of the company as insiders at the moment. We did a financing just recently that we closed just recently, which was led by Cormark Securities. And out of 8 million that we raised, insiders participated for $1 million worth out of that financing.
Perfect. Okay. So in terms of cap structure, it looks pretty lean. You obviously, like you said, you're pretty well protected with insiders. I think in terms of cash and equivalents with the spin out code that we were talking about earlier, you have around 35 million in cash or equivalents, gives you an enterprise value around 65 million. In terms of, yeah, let's actually talk about, rather than focus too much on the cap structure, because like I said, it looks pretty good. Why don't we actually focus a bit more on the camp itself? Because I looked over your presentation and you sort of touched on something there, which I think is pretty prevalent at the moment, especially within the majors, is that they are trying to use better access of their existing infrastructure or their existing deposits and sort of grow within the existing camps that they're in. And obviously that's a pretty good advantage of one being in Quebec, but obviously Chibougamau is a bit of a rising star at the moment. So why don't we talk about the camp in general and what's going on there?
Sure. Yeah. Yeah, that's a good way to start, Peter. So if we want to put things in perspective, because this is really a camp approach, we're looking at this camp and as one operation because it really needs to be. And if we look at what has been happening in recent years, even when the sector went through some pretty difficult times, there are three camps, and Peter, you probably know these things better than me. But the way I look at it, there's three camps that have been attracting a lot of capital, a lot of attention, and also where stocks have been performing pretty well. So through that, I'm thinking you have the camp of Guyana, you have Yukon, and you have Finland, right? So in Guyana, for example, you have G2 Gold, you've got Reunion, you've got Omai, you've got Aris as well. So you're looking at a camp there that has probably around 20 million ounces. Then you have Yukon. As a matter of fact, probably have two camps in Yukon, right? Central Yukon and West Yukon. But so where you have Western, you have White Gold, Newmont is quite active, and on the other side you've got Banyan, you've got Victoria. So Yukon, you're looking at a larger camp. And then you also have Finland that has been performing very well. You know, Agnico is very involved. You have Rupert that has been performing extremely well in recent years. So Finland, you're looking altogether at about 12 million ounces. Which brings me now to point out the Chibougamau Gold Camp, which is really rapidly emerging. And the Chibougamau Gold Camp is really on the cusp of joining the other camps that I was just mentioning. So the Chibougamau Gold Camp today already has in a vicinity of 10 million ounces. And all these deposits in the Chibougamau Gold Camp are actually closer to one another than any other of the camps that we were discussing, which makes the Chibougamau Gold Camp really ideally suited to be consolidated under one roof, so that all of these deposits can feed the same mill. And it's also a camp that is emerging very, very rapidly. So what we've been focused on in recent years has been to consolidate that camp. So the main deposits are Nelligan of IAMGOLD, Monster Lake of IAMGOLD, and then we have pretty much everything else that is relevant in the area. Philibert, that is only 9 kilometers away from Nelligan. So you can imagine a mill being halfway between those two. So that's 4.5 kilometer of trucking distance. To put things in perspective, 4.5 kilometer is basically the pit size of Nelligan, and it's basically the pit size of Philibert. So it really put things in perspective to show that it really needs to be the same operation. Then we have the Lac Surprise, which is the extension of the Nelligan deposit. It adds 1.4 kilometer of mineralization to Nelligan. We also have Chevrier, a little bit to the northeast, which is a huge system and provides you a lot of blue sky. We also have Croteau a bit more to the north. So all in all, that camp, as we speak today, is about 10 million ounces. But with the work that we're about to do and the work that IAMGOLD is currently doing, I think that camp can grow easily to more than 15 million ounces. And as this happens, then that camp becomes, becomes front and center when you compare it to the rest of the world. So frankly speaking, I think 12 to 18 months from now, the Chibougamau Gold Camp will be red hot when it comes to gold destination.
Obviously, a lot of this sounds like it is really tied around IAMGOLD and what decision making they make at the moment, right? Given that they own the largest deposit in that area next door to yourselves. So why don't we talk about, you've just closed the financing, I think around a month ago, you announced it in terms of the upsize of around 8 million. So you've got a bit of cash in the bank. What's in the ground? You spoke about what you have at the moment. What's in the ground at the moment in terms of your deposits in relation to IAMGOLD? And what are the use of proceeds? How are you going to actually add some value off the back of that and make this a bit more attractive?
Yeah, absolutely. So, yeah, what we have in the ground compared to IAMGOLD is actually, I think, the right question. But I mean, first, our projects together as we have them right now, a viable operation, I would say that they are about to become sizable enough as a standalone operation. But like I said, we look at the camp as a single operation. I think there's a general understanding that all of this needs to come together somehow. But what we have in the ground versus Nelligan is really the right question because simply put, our ounces made the Nelligan ounces worth quite a bit more. And the reason I say that is because although the Philibert deposit is, as it stands right now, smaller than Nelligan, it has a higher grade. And if you look at it in a combined operation, then if you start by mining Philibert, you lower the payback period significantly, right? So the grade at Nelligan is about 0.86, so it's a bulk tonnage operation. And if you look at the grade of Philibert, we are at 1.1 gram a ton using the same cutoff grade. So already you get 25% more gold per ton that you mine and process. So that really lowers your payback period. But I think there's more than meets the eye here. If without getting too technical, if you look at the sensitivity table of our grade into the 43101 resource that we just published last year, if you look at a cutoff grade just a tad higher at 0.5, we're not losing much ounces at all. We're losing about only 10% of the ounces, yet the grade becomes 50% higher than the grade of Nelligan. So this can really have a drastic impact to lower the payback period of an eventual operation. And as you know, the payback period is often the main metric being looked at to decide what becomes a mine and what doesn't. So the grade is definitely one thing. Second, we have very good metallurgy. So I mean, it's a big camp and you know, different deposits and the different type of deposits. So so to my point earlier, you would start by mining the higher grade, and then you can continue with you know, where you have good metallurgy, and then eventually your infrastructure is all paid for, and then you can continue with the lower grade and the material that is a bit more refractory, and you're still going to print money. So so to consolidate gives you all of this. So our metallurgy at Philibert has been proven very, very strong. We're looking at about 93 to 95% recovery, and we think we're able to advance and to grow these deposits significantly. So the second part of your question was in regards of our use of proceeds, right? So as you mentioned, we just raised 8 million. Altogether, all in costs are probably around $200 per meter in the area. More importantly, our deposits in this area are very, very well disseminated, which means that you keep drilling and you keep adding ounces. If you look at our previous programs, you know, every hole we poke, that there's a decent amount of gold in it, which means that we can continue to build ounces. And with the money we raised, you know, we can drill between 20 and 25,000 meters, and to the point where when you drill, you keep adding ounces. If you look at the last resource update on Nelligan that IAMGOLD did, they went from 3.5 million ounces to 5.5 million ounces using only about 20,000 meters of drilling. So we're going to be drilling quite a bit. And also, if you look at IAMGOLD has started to turn its attention towards that camp. I'm sure, Peter, you're familiar with IAMGOLD. IAMGOLD has been focused entirely on Côté, as they should have. I mean, Côté was a make or break for them, right? But boy, oh boy, did they make it. I mean, the turnaround that has been happening over the last 24 months at IAMGOLD has been nothing short of spectacular, as you probably know. And now they're starting to turn their attention to their next avenue of growth, which appears to be the Chibougamau Gold Camp. To that effect, they recently acquired Vanstar, which was their joint venture partner on the Nelligan project. And you can see in their last MD&A that they are currently drilling in the camp. They're drilling at Nelligan, they're drilling at Monster Lake, and they're drilling at Anik, which is on the same trend as Philibert. So they're going to be drilling probably close to the same amount that we are. So as I said, that camp is about to bring a lot of attention.
Good. Okay. loads of little bits there that I actually wanted to dissect a bit. So obviously you have in relative terms a much higher grade deposit to the deposit next door to you that IAMGOLD own. Obviously they have around 5.5 million ounces in indicated and inferred at the moment, which is, if they can upgrade that to measured indicated, would be considered a tier 1 asset by Barrick standard. Anything above 5 million ounces is now considered tier 1 and worthy of infrastructure. So you'd assume IAMGOLD, being a fairly large company, would have a similar mindset and see this as a fairly big priority. What's the likelihood at the moment in terms of, do you think there's a possibility that, because what we often see is that when you drill deposits more and more and more, the grade actually tends to decrease, and the more definition drilling you do start to see that. Do you think is there a possibility that you've found more of a higher grade core within your portion, and the more you draw this out, that it will become a bit more similar, obviously very large scale, but similar to Nelligan, or is this different geologically to the deposit next door?
It is different geologically. I mean, it is similar in a sense that it is, a bulk type operation, but it is a different host rock. So I don't think to expect the grade to lower to be in line with Nelligan should be expected, although it's too early to know what to expect as we extend our deposit. But I'll say this: Philibert historically was looked at as an underground project at a much higher grade, and that's because Philibert was discovered first, and it was looked at as an underground in order to go after the high grade part of the deposit, having in mind to truck that material over a very long distance. Now that Nelligan has been discovered and our project has been transformed and other projects have been advanced, now this is a camp on its own. There's no doubt about this. So the Philibert project now has been transformed into an open pit, because historically they were basically drilling right through a big open pit to go after the higher grade underground. So as and we have yet to include any of this underground potential in our resource calculation, something we're probably going to do in the future. So that can potentially go the other way around and increase the grade. As far as the open pit and the mineralization, there's an enormous amount of potential to extend both to the west and to the east. Our current resource at Philibert is based on 3 kilometers of mineralization, but the geodata indicates that you're looking at further mineralization 2 kilometers on each side. So right now our deposit is based on, our resource is based on 3 kilometers, and there's another 4 kilometers in total to go after. So that's going to be our main focus from here.
Good. I thought I heard you mention refractory when you were talking about metallurgy. Is this sulfide material? And if you're no.
So no, this is not something that you can leach. And we are only looking at small lengths at Philibert, but so far very good non-refractory material. But like any camp, the metallurgy can be volatile, and I don't know the details of the deposits we don't own, unfortunately.
Okay, so but at the moment we do know that you won't require refractory to process the material. Okay, yeah. Okay, all right, perfect. Obviously, you can't really talk to IAMGOLD too much, but obviously, given that if you're going to build a flow sheet around this, and if you can find what you need to find, or what you think you're able to find with the couple of kilometers east and the extra couple of kilometers west, and get to a deposit of scale, it would make sense, I guess, for IAMGOLD to, before they make their own mine plan for Nelligan, to obviously have a look at Philibert and see if they can work that in if they wanted to, before they go and do engineering for a standalone project that then can't fit capacity in their own.
Couldn't agree more with you on that, Peter. I think Something should happen one way or another. And you know, there in mining, I always say mining is about M&A. And there's, you know, always several different ways to put things together. But if you ask me what makes sense, something needs to happen before any of us start wasting time and resources on doing any type of economic study and any type of operational design. But right now, our focus is to build ounces, not to build a mine. And that's usually where the most money is being made in that space is when you build ounces.
Yeah, I agree. Can we talk about this this agreement that they had with Vanstar? And obviously, you said that they acquired was it 25% or 20% portion that they owned of Nilligan?
Yeah.
What valuation did they put on Nilligan for that percentage?
So they acquired Vanstar not that long ago, actually, just a few months back. And just to explain, so Vanstar is the company that originally made the discovery of the Nilligan deposit. So that joint venture was now 75% IAMGOLD, 25% Vanstar. And they paid a bit more than $40 per ounce in the ground for Vanstar. I will say that Northern Superior, if you readjust for the spin-off transaction and the shares that we own of On Gold that you mentioned earlier, so if you look at the valuation of Northern Superior, we are currently trading between $20 and $25 per ounce in the ground. And we're well cashed up now to continue adding ounces. And our expectation is that we can continue to add ounces at about, call it $6 to $7 an ounce. So we're looking at very, very accretive work that we're going to be doing going forward. I'd also point this out. When IAMGOLD acquired Vanstar, you can see in that press release a quote from the CEO of IAMGOLD, Mr. Renaud Adam. And he pointed out clearly, he said, obviously, the focus of IAMGOLD continues to be the ramp up and the commissioning of Côté. But then he said, once this is on cruise control, then that's going to be producing a lot of cash flow, which can be reinvested into avenue of growth in Canada. And it really looks like this is the avenue of growth because, you know, they not only bought Vanstar, but now they're starting to be quite active on the exploration front as well in the area.
Good. Okay, that's perfect. So what we're essentially looking at is potentially, obviously, Côté is now commissioned. It's in ramp up. Maybe another 12 months to settle the dust and make sure things are running okay. And hopefully they continue to do so. And then in a year's time, I guess you'll have a lot of assays and potentially a much larger deposit to start a conversation with.
That's right. Yeah. So we're going to be drilling this summer. We are going to be drilling the next winter. After that would come a resource update. And I think we're in a position of strength, being cashed up, where we can be valued now not only on the ounces that we have, but the ounces that we are expected to find. Right. When you end up in that situation, it's very important to be in a position of strength.
Good. Okay. And just before we do wrap up, can you just tell us a little bit about this idea of spinning out into On Gold and
yeah,
why it didn't stay within the current company? What the rationale was, and really what the opportunity there is? Because I believe you own, was it 72% of the spin out?
72%.
Yeah, it's pretty chunky. So what's the plan?
Peter, anyone who knows Northern Superior watching this interview right now is probably banging his head on the wall going, when are you going to talk about TPK? TPK has an absolute legion of followers, not to say a cult of followers. People are extremely passionate about TPK. TPK has an enormous potential as a project. When it was historically discovered, I mean, that stock performed amazingly well. To put things in perspective, so TPK is the largest gold until anomaly in North America and frankly, potentially the world. So we're looking at potentially a massive discovery. Our team feel, gold until is basically small little bits of gold that are disseminated in the soil, but then there's a source to that, right? And we feel now pretty strong that we've identified the source of that. One drill hole that caught everyone's attention was 25 grams over 13 meter, not deep at all. So if we continue to build on that, it's a district scale deposit, so the potential of that is humongous. So the reason why it was pointed out, well, a company our size can't do too many things at once, because then you end up diluting the cap structure too much. And we have a pretty good cap structure, so we want to protect that. But also, that project was worth having its own focused management team and its own dedicated capital. So we raised more than $5 million for that spin-off, and then we listed the company. So the company is called On Gold. As you pointed out, we own 72% of it. It started to list just a few weeks ago, and then also I'll mention we still have those shares on the balance sheet. So that doesn't mean that ultimately or eventually we wouldn't distribute those shares as a dividend to our shareholders. Absolutely, we can look at this, but at the right time. If we distribute those shares too early in the listing, when we are in early exploration stage and a new listing that's not liquid, then it's clear that you end up hurting the stock price of the spin-off company. So for the time being, we keep those shares on the balance sheet, but on the back of successful exploration and as we advance the company, absolutely we can look at doing a dividend of those shares.
Okay.
Now, yep, go ahead.
No, I was just gonna say you raised $5 million off the back of that. I'm assuming you're now well funded to drill out these till anomalies and see what the potential is. Yeah,
absolutely. And I'll say this: we're taking a very, very different approach for this company in Ontario. I mean, the company is called On Gold, ON for Ontario Gold, right? As simple as that. But all of Northern Ontario comes down to one thing. It comes down to social acceptability. It is a much more difficult environment for exploration companies that things are in Quebec and Chibougamau, for example, which is really a mining area. And we are making the point to take the right approach with the right people. So when I talk about social acceptability, it is to really make the local communities, the First Nations that are involved, to really make them as partners and to have them as actual partners. And we mean what we say in that respect. So if you look at who is at the helm of this company, so the CEO is Mr. Kyle Stanfield, who is an expert in sustainability. He's an expert in social acceptability. It is Kyle who permitted Musselwhite. It is Kyle who permitted Rainy River, for instance. And actually, Rainy River, it was also discovered as a gold until anomaly. Kyle has good relationships with different local communities.
Good.
And our view was that if a lot of the value of the project comes down to this, well, the entire company needs to be coordinated in that fashion, and therefore Kyle needed to be CEO. But we don't stop there. If you look at the chairman of the company, I invite you to look at his Wikipedia page, Mr. John Kim Bell. So Mr. Bell joined us as chairman. Mr. Bell is Indigenous himself, was born on the South Shore of Montreal. And Mr. Bell had such a colorful career so far. So you allow me to dig because it's actually quite interesting. So he started in the arts. He became a conductor, including at the Toronto Orchestra. Was also a conductor on Broadway for different musicals. He ended up touring the world with a bunch of rock bands, including the Bee Gees, that comes to mind. Then he went to the corporate world. He was handling First Nation affairs for companies like Glencore and Hatch. Then he also sits on the board of several very high-profile organizations, such as the Canadian Broadcasting Corporation. Then he went into philanthropy, where he raised a very impressive amount of capital and through different charities in order to send a lot of Indigenous youth to college and whatnot. So very, very impressive career. And that is really a testament that we mean what we say to do things right in Northern Ontario. And really the strategy of the company there is obviously start with TPK, do things right, really partner up with all stakeholders, and then we can apply the same approach throughout Northern Ontario and unlock value of projects that are frankly too cheap because the wrong approach is taken.
Yeah. Okay. Good. Just on the exploration side of that, obviously you said that you've already found, or you think that you found the source. Was that through base of till drilling, or was you? What was the sort of exploration approach to that, and what does the exploration program look like for that moving into the summer?
So we have yet to announce any type of drilling or what our program is going to look. Definitely, our hope is, our intention is to get active this summer, and I really think we will. But we will detail soon what this is going to look like. And we will also detail our drilling campaign shortly for Chibougamau on the Northern Superior side of things as well. That should be out shortly.
Good, exciting times. Just before we do wrap up, anything that we've missed in terms of news flow to expect over the next 12 months? What are we expecting? Obviously, I'm expecting a big new shiny resource at some point off the back of Chibougamau drilling, but what else can we be looking out for?
Yeah, I mean, we are going to continue. We're going to add another high-profile director to the board, and it is someone that really can help Northern Superior transition eventually from advanced exploration towards development. And so we're already thinking ahead on that. We are going to detail our exploration plans for the next 7 to 8 months, so that will be out shortly. Then there's going to be a lot of drilling results to come, but all of that will be happening at the same time as IAMGOLD will be making a lot of progress as well, and then we'll see what happens. We're going to be focusing on Philibert. Because we think this is where we add a lot of value. And also we're going to be focusing on Lac Surprise. Lac Surprise, which is the extension of Nelligan, right? And I'll mention this, during COVID, Northern Superior, the shares were reacting extremely well. The shares went to about $1.50 during COVID. At that time, the stock was running because of the results at Lac Surprise, which was the extension of Nelligan. So I think we have some pretty happy days ahead.
Good. Simon, thank you for the update.
Peter, thank you very much for having me on.